You can't hear me eating, can you? No, man. No, I can't hear you, Shifter.
I think we are live, so welcome to Talking Investing. I'm Tom.
I'm George.
And we are here to talk about options today. But we'll give a minute or two. Let everybody...
No, we're live. We're
live.
So, we're going to try again. I think we should give it a few minutes.
Yeah, that's what I'm saying. Let's talk. We'll chat for a few. Let everybody get in the room. Or the whatever. Hope everybody had a Merry Christmas. Safe, happy holidays. What, you got a light show going on?
Who, me? Yeah. I was doing it for Christmas. Hang on a second. Okay. I'm better now.
You good?
Hang on, I had to turn all the sounds off and everything. Is that better?
You sound good to me, so I don't know. Anybody out in the audience? How's it sound?
I think it sounds okay.
I still don't know if this is on a lag for a few seconds or if this is...
No, it's on a little bit of a lag. Not that bad.
Can you see my screen?
Yeah, I can see it.
All right.
Bitcoin. What's Bitcoin doing?
Got Bitcoin on the screen. It's been since 6 o'clock this morning. It's been very good.
What has it been? What was the high?
So over the holiday weekend, I mean, we're still in these, we're inside of our two purple lines right here. We've been trading in a very tight range, but we almost tested this purple line. Which is I have at $52,000. So we got up to 51,878.
I said 53, didn't I?
Yep.
I said 53 at 46, though.
That's right. Yep.
Okay, I just wanted to make sure.
You said that before we had this green spike. You said this back here.
But what did I say next?
And then you thought we were going in the other direction.
Yeah, I still think we're going in the other direction. You know what I mean?
We had some super low volume over... Actually, Christmas Eve was really low volume. Christmas had picked up a little bit. Was low volume until 4 o'clock today. We had a nice big surge and kind of got back on track. So we've been around 51,000. I mean, here we sit at 50,900. So we've been basically at 51,000 the entire long weekend. We jumped up to 52, down to 50.
You know what? I think we said this, wasn't it? That I think I said either it's going to go to like crazy numbers or it's going to zero. And that seems to be everybody. It's because it's such in a weird position. You know?
I mean, technically it traded very in the long term. Everybody's got a different opinion. I did watch some YouTube videos this weekend, which I don't normally get to do, so I watched a bunch of everybody else's theory. But you'll see, like, this morning at 6 in the morning, we exactly touched this purple line. So that is good because this needed to hold. If that had broken to the downside, then that would have been very bearish. But it held like a champ. And then it was straight up from there. So I feel real good about it. Are the futures alive yet?
When do they recast what they're going to be?
So the futures are pretty flat, almost zero. Call it zero. They're all green, but basically hovering around zero. And these are for the equity markets.
Do the futures like show up?
Well, I mean, I just go to Yahoo and look at the equity futures, which if you go, so you won't actually see the S&P 500 right now. You'll see the S&P 500 futures, which are up 0.1%. Dow's up less than that. So, I mean, for effectively, the NASDAQ's up 0.25%, and that's the highest one by far. So, very low.
So now Tom's going to finally teach me options. He could teach me every week and I still wouldn't remember them or know how to do them. So what we're going to do is do a very... I told him I think we need to go back to do like a 101 type of thing. Just because everybody gets scared of options. And everybody forgets why you should use options. Like right now, probably a lot of people are up high. When you say people are up high?
Well, on the big cap stocks, if you own Apple or Google or Facebook or Tesla, you're way up.
Yeah, and I mean right now is like a good time to start thinking about options because you tell me, how does it save your taxes?
Well,
like if you want to, let's say for an example, we want to take profit.
Those are your choices. If you feel like your stock is going to come into a rough patch and you've been holding it for a while and you don't want to sell it because you have big profits built in, that's one of the two things that you can do, and we're going to talk about put options today. So there's call options and put options. Put options you buy if you think that your stock or a stock is going to go down in the near term. So they're one of two things. I call that protection or insurance. So if you have a stock and it's way up and you don't want to sell it and take all your profits and pay taxes on it because you're a long-term investor and you want to hold it, but you are worried that there's some significant potential downside in the short term, you can buy a put. And that is protection. So we're going to go through an example and show exactly how that works. The other reason to buy a put, so when you look at the activity in puts, and we'll look at that and I'll show you what I mean by that. Sometimes there's a lot of activity, but that doesn't mean people are bearish on it. It might actually mean that people are very bullish on it and they've bought a lot of the stock and they're just protecting themselves to the downside to some extent. So that, the put options can increase for one of two reasons. So it's very difficult to speculate. The people look at that and speculate for all time as to, what the reason is. There's a lot of analysts that are looking out at options activity. I do that myself on the stocks that I follow and look for an option or a strike point that has some kind of very unusually high activity. And, sometimes that has led us to a good trade because it can be an indicator that somebody knows something that we don't know.
You give that's a great example. Give that example of what you mean there. Could you actually pull up a real live one so you can show what people do and how they protect their wrists?
Well, we're going to go through Live Nation, so you want to look at their
let's look at
activity.
Theirs.
So, okay, so the further out you go, so there's two key things when you're looking at an option. The date that they expire. So options, unlike a stock, which you can buy and hold forever, options expire. And after that date, it doesn't matter what happens, they're worth zero. They're gone. So that is one major factor you have to consider when you're buying an option. The other thing that you have to decide is a strike point. So that is the price that you think the stock is going to. Now, you don't necessarily have to buy the option at that price. What you need to do is find an option that you think is going to have good movement, even if you don't think the stock's ever going to get to that price. You're looking for an inexpensive option that has a lot of potential upside. Because what can happen is, as you get close to the money or in the money, the premium is so huge on some of these options, depending on the stock, that, you know, the move has to be drastic just for you to get back to break even. So again, we'll actually walk through an example of that. So if we look at, and you will see that for the vast majority of the time, and this is a perfect example. So this is the nearest option, January 21st. So that's less than 1 month from now. So this company has monthly options. Some companies, the larger, more active companies, can have weekly options that expire every Friday. Even if they have weekly options, the ones that end up having the most activity are this monthly option, which is usually somewhere between the 18th and the 23rd. It's that third week of the month. That's the big option each month. But there's certain stocks, like I'll go to one of our. So we do a lot of Bitcoin miners on the channel. So I'll go to Marathon. Options. So I'm using Yahoo. I find this very simple to use. You can't, once you go to do this, you got to go into your broker, and if it's Robinhood or whatever the case may be, and that's where you'll make the trade. But this is a very user-friendly format, in my opinion. I'm not affiliated with them in any way, but I just find this easy to use. So look at these numbers. This is December 31st. Today is December 26th. So this column right here is what we're looking at, volume. That means that on Friday, at a $40 strike point on a call. So when you buy a call, that means that you think that your stock is going to go up. It's going to increase in value. Now, they have 1 week, and it's a short week because there's a day off. So these people literally have 4 trading days. They sold 16,000 options at the $40 strike point. So this is just one strike point on one options day. So the volume on a company like Marathon, this is one of the things that you need to make sure. You want some decent amount of, you don't need this volume, but you want a decent amount of volume to make sure that you can buy and sell and not get stuck with your option. But when you get to a stock like this, where, you've got strike points 4,000, 1,200, 6,000, 3,000, 4,000, 6,000, 3,000, 16,000, almost 3,000. The premiums start to get really high because there's so much demand for these options. So these are very tricky. I have found, particularly in the Bitcoin mining sector, which probably most of you watching are participating in that. Riot and Marathon's premium for the last, coming up on a year now, they're sometimes they're the number 1 and 2 highest premium options in the whole stock market. They're always in the top 5 for the last almost year. So that means they're very expensive, which means big moves have to happen for you to make any money, or you're going to lose money on your option. So I have been more prone, and we're not really going to talk about selling options today, but it's been a better strategy for those companies over the last 6 or 8 months to sell options instead of buying them. Because when you sell them, you're the one that gets paid the premium. So with premiums this large, this is $2. So if we look at this, this was at $38. So if you take an in the money $2.47 divided by $38, that's a 6.5% premium on an option that expires in 4 days. So if you can make 6.5% every, and let's say it wasn't a holiday week, then it would be 5 days. If you could make 6.5% every 5 days, you annualize that. There's 52 weeks in a year. You're making a fortune on this stock if all you do is just sit there and sell options in, right at the strike point that's at the money. So again, with this one,
but remember what Marathon can do to you.
Well, Marathon, the reason that these trade like this is out of left field. Marathon was up 11% on Thursday. So, and
no, but remember what they did to me was I did a $50 put option.
Oh,
and then they released a about how bad their November numbers were?
They put a press release out right under the wire when George had 1 day left on his options and the stock tanked. So you're always, those are the risks that you take if you sell options. So if you buy options, your risk is, you spent X amount of money and that didn't work out. So I will also talk about a strategy. I think the vast majority of people that use options use what's called a stop loss.
Yeah, I was going to say I could have got destroyed, but it's like Tom said, it didn't matter how far it went down because we did a stop.
Well, we actually did a spread on that one, which is another strategy, but that one we're definitely not getting into today. But if you do a stop loss, that means that, so let's say you bought this Marathon. So this is Marathon that expires at the end of this week. Let's say you bought this for $2. You could tell yourself, you know what, I'm willing to risk 50% of that. And we're going to look at this in more depth, but it's all about risk reward with options. The reward has to be more than the risk. So that if you go 50-50 on your options, you've made money over the course of time. You really should, if you're doing mid to long-term options, you actually really should do a lot better than 50-50. But I use the assumption that if I go 50-50, if my risk reward is good, then I make money. And so what you'll do is you'll say, okay, I'm willing to hold this all the way down to $1, but I'm not willing to hold it all the way down to $0. So if you bought one of these, this represents each option is a lot of 100 stocks. So this is the right to buy 100 shares of this. So so you got to multiply this $2 times 100. So this would cost $205. So you can tell yourself, okay, I'm willing to lose 100 of that. That's 50%. Let's say we bought it for $2. I'm willing to. So I'm going to put a stop loss on my order, on my stock once I own it, that says if this hits $1, not my stock, sorry, the option. If this hits $1, automatically sell it. So I don't have to look. I don't have to stare at this all day, every day, and see what's happening. I just have the computer. Whatever broker you're using, you set it up so that if it hits that price, then you sell. So that's a way to limit your risk. So your downside risk is now 50%. So your upside risk needs to be significantly higher than that in order for me to buy an option. I look for, at least triple, an upside versus the downside. So again, we'll actually run through the numbers on one, and we can do that. We might as well just go ahead and do that right now. So let's just actually go through the process of picking an option. And I had a few people, we discussed the company Live Nation on it was actually Thursday's live
What
feed.
do they? Oh, those are the ticket people?
Yes. So we discussed that, and I had a few people specifically request, let's go through that one since we've already talked about it. So that made sense to me. So
I'm sorry. I will.
we're gonna go through Live Nation, and we're gonna go through my thought process as I try to pick an option, and you guys can see, not necessarily buy the option that we talk about, but just to see what my process is and how I decide, how far out. So again, the two big decisions is what's the date that it's going to expire, and at what strike point do you want to buy it. So these super short-term options lose a massive amount of premium every day. Basically, these options here in Marathon that we were looking at have 4 days left. So they're going to lose 25% of their value. If the stock doesn't move at all, they're going to lose, 25% of their value every single day just because another day has gone by. So, ending in, if, the stock is flat, ending in 0. So your option's going to be worthless. So you need movement. And so that's the reason I like to give myself some more time as well, because I don't know what's going to happen in the next 4 days. Like George said, they could have a bad press release, or, with Marathon, they had their little thing with the subpoenas, and there's some knee-jerk reactions where you get caught up in a 2 or 3 day thing, and you haven't given yourself and your option enough time to mature.
I'll tell you another one that got me too, guys. And you just need to be aware of this, is they issued more stock to raise money, these bastards.
And all those things are going to happen. This is the thing. And that's why, if you give yourself 4 or 5 days and one thing happens, you're cooked. So if you give yourself 2 months or 3 months or 4 months, sometimes I'll do 6 months. Technically, a leap option is 1 year. And so in Marathon, we'll just take a look, because Marathon is a heavily traded option. Let's take a look at a leap option.
Can you also explain the benefits and the returns on what these places do, what you should expect?
Well, yeah,
So,
I'm going to literally go through, pick one, and do the upside and the downside.
And the downside. Okay.
Yes. So if I go to a year from now is going to be January of 2023. So this would be a leap option, and you guys are going to be, well, if you already know, then you won't be, but if you don't know, you're going to be stunned at the price of these. So Marathon is trading at $38 right now. So for whatever reason, there's a $37, and then it jumps to $40. So if you were to buy a $40 leap option, it's almost $17.
Are you serious?
So if you do the percent on that, I'm going to just round, divided really by 38. So it's even worse than that. It's a 45% premium, not including the fact the stock has to go up $2 just to even get to the strike point. So
explain to me how you did that.
So it's basically $17. I dropped the 7 cents. And this stock is trading at $38. So you are paying $17 to buy an option on a stock that you could buy for $38.
What would be the reason why somebody would do that?
If they think Marathon's going to 150, then now you're paying $17, but you think you're going to make $110. So your return on that's astronomical. But you need to believe something like, really to make, again, I like to say at least 2.5, but I'm going to use 3, so let's call it, so we'll do it right then. So 16.93 times 3, that would be a triple. So Marathon would need to get to approximately $51. No, that's an extra. Marathon would, $91. If Marathon got to $91, then you would triple your money on this option in 1 year. So there are probably an awful lot of people that think Marathon's going to go to $91. So you're going to get some. Now, you'll see, we've gone out a year to a leap option, so you're not seeing 3,000, 5,000, 7,000. You're seeing 93, 26, 75. There's 51 here. Let's see if anybody went crazy down here. Not too much. But this is considered good activity for an option that's a year away. So these are liquid options. And again, you probably want to grab one of the ones that has some activity. You don't want to go here where this traded 1. And you can check historically. I'm just going to go into this one. So if you look at this.
You're on Live Nation or?
No, this is actually Marathon. I'm just
okay.
looking at like this has had a lot of days 0 volume. But there's enough days here. The vast majority of the days, at least one of these sells. And with something this expensive, you're probably not going to buy too many more than one of these. 1, 2, 3 of these. So it's liquid. Even this is probably liquid enough. But that is something to make sure of. You want to make sure there's activity in your stock because there are in your option. There's options that sometimes go 3 weeks without anybody trading them at all. So you could really get stuck. Okay, so let's just run through Live Nation. We'll go through and pick an option and go through the upside and the downside. And again, Live Nation. So I'm going to pull up the chart. So, because the first thing you need to do is pick a strike point. So that, you've got to use your judgment. So we talked on Thursday that I feel that Live Nation is very overvalued. So we won't really talk about and debate that today because that's not the point of this exercise. Let's assume for the point of this exercise that, I think this is overvalued. So I'm looking to buy a put. So I'm going to buy to open a put. And so that's how it'll work in your brokerage. You want to say buy to open, and it's going to be a put. So now I got to decide what strike point do I think is reasonable. So when I look at this stock, this goes back right here was February of 2020. So we all know that was right before our global event that caused a crash in basically absolutely everything. So this stock, when it was healthy prior to that point in time, was trading at around $75. And I'm going to zoom out for a second so that you can see. This stock actually has been on a massive run. This was an $8, almost $9 stock in 2011, and it's been trading steadily up ever since. From 2019, it went from $48 to 2020, $75. So this was a stock on the move upwards. So obviously we lost all this value, but by the time November came around, so November of 2020, the same year, 7 months later, 8 months later, we were back to pre-pandemic prices. Now, what's happened since then, this is what has amazed me. What's happened since then is, I'll go up to today and not even its all-time high. It's up another 90% since then. And if I go here, it's up 100, its recent high is 107% up from where it was just 1 year ago. So, and again, I won't belabor this, but this is the income statements for this company for the last 1, 2, 3, 4 years. So if you look at what this company has done, in 2017, they lost 48 cents a share on $10 billion of revenue. In 2018, they lost 9 cents a share on $10.7 billion in revenue. In 2019, they lost 2 cents a share, so just about break even, on $11.5 million in revenue. This company, because it deals with live events, was dramatically impacted by the pandemic. So their revenue in 2020 dropped to $1.8 billion. They lost $8 a share. So my problem with this company is, if you look at their balance sheet in a 4-year period, they had to borrow $4 billion to stay in business. Yet, over the last year, they've doubled. From, if you look at this, right here, and again, this is 3 years into the company. You know, they lost 2 cents a share, so they just finally got themselves to break even. And this was this stock's all-time high of its entire existence. And it's now, so if we go from that moment, maybe this is the one we already did, to this moment, well, that's actually up 55%. So, right, and then to the all-time high, 65% higher than its previous all-time high. So, again, we're not going to talk too much about why we think that. So that's a little bit of my line of reasoning of why I think this is overvalued. So now, how do I pick a strike point? What's realistic? Because, you know, you've got several different levels here. To me, this goes back to the beginning of March. So, you know, that's almost 10 months ago. So is this stock going to drop in a period of time? Is this stock going to drop now? Also, I can pick the same exact point in June, late June, which is almost July. So that was more like 6 months ago. So this was trading in this level for a period of time up to about 6 months ago. So that's a potential point that I could say, hey, you know what? Maybe I think it's just going to go back there. Even if it doesn't crash, you know, it's been here several times. So maybe I think it's going to go back there. So that's one potential spot, and that is that's, call it $94. If I want to take the other side of this, I can say, you know what? In July, actually all the way up to August 19th, this stock hit $76. So I can throw, let's do a real line. We were going to go here to late August. So that's about $78. So you've got to pick a strike point that has some chance of it getting at least close to. It doesn't even have to get there. It has to approach that over a period of time so that the value of your option goes up. So to me, the absolute lowest that you can pick, and I think this is way too low, but this could get back to $77. It was there, you know, the middle of August. You know, that's about 4.5 months ago. So if you believe that it can go down in the next 4 or 5 months, as much as it went up in the last 4 or 5 months, then that may not be a bad strike point to pick. So, you know, and you don't want to get, you're going to see the premiums once you start to get at 100 and 105 are so big that it gets difficult. So, you don't want to get too far away from where that's trading right now because, you know, it starts to be unrealistic to assume a crash even in a 3 or 4 or 5 month period of time. But if you're looking at a chart here and you see that 4.5 months ago we were at $77. So that's a legitimate potential option to buy. So I would let's pick something around $78 or $80. And then, you know, this was once, twice, 3 times, this was resistance. So it's extremely reasonable to think that it could get back to the $95 range. It's actually only just spent a very short period of time right here above that. For the rest of it, the entire life of this stock, it was below that. So that's an even more reasonable potential option pick. So now let's go to the options. So the very first option you can buy is January 21st. On something like this, you know, we're looking for a big move. We're looking for this. We're picking points that were, this point was October 1st, so that was 3 months ago. So we're looking for things that happened about 3 to 4.5 months ago. So I like to give myself the same amount of time. If it went up in that amount of time, I want to give it that same amount of time to go back down. I don't want to assume that, you know, I've picked the top and it's going to crash today because you just don't know. this stock could keep going up before it goes down. That's one of the hard parts about. That's why I don't short stocks. This is a much safer way. Buying a put, you can quantify your risk, and because if you short a stock, theoretically your risk is infinite because the stock could go up forever and you just keep losing money and losing money. So let's go look at the options. We're going to pick, so we said 80 and let's go 80 and 95. And then from a time frame standpoint, for $95, I think we want to go 3 months out because that's how long ago it was. And for 80, we want to at least go 4 months out. So January is too soon. I would not assume that after 2 years of this stock going up in a straight line that, in the next less than 30 days, it's going to turn around. So I think I've opened some windows here. I've picked a few of these that I thought made sense. So if I go March 18th, that's a little less than 3 months from now. So, and we were at 95 about 3 months ago. So now these are the calls. We're not looking at that. We are looking at puts because, again, puts, we think the price of the stock is going to go down. So we're going to buy to open a put, and we decided on a $95 strike point. We've given ourselves about 3 months. So what I'm going to do is open this and look at the chart. And this is kind of how I make my risk-reward assessment. If I look at this option, it's currently trading at $3.45. So this option has only been trading for about a month. So there's not a massive history on this option. But if I go back just 3 weeks ago, 3 or 4 weeks ago, this option was trading at almost $10. So not quite a triple, but there's your upside. If this can just get back to where it was a month ago, you're going to go from $3.45 to $9.80. So, that's over 2.5x right there. So this to me looks like a good risk reward because, again, we'll do a stop loss, at, let's say, $1.75. So that, that means we could lose 50% of our money, and that's always on the table. There's just no guarantee with these stocks that they're going to move in a certain direction. So you've got to assume a downside. If you quantify your downside by doing a stop loss and saying, I don't care, I'm out. And one of the reasons to do that is not because, there are going to be a few times you kick yourself and go, wow, I got out and then the thing went through the roof. But if you are going to participate in option trading over the long haul, you've got to use the law of averages. So you've got to give yourself the same chance on every stock that your downside's 50% and your upside's 150% or 200% or 250%. Those are the ones that I like to look at. So if we go $3.45 divided by 2, that is $1.73. So we'll do a stop loss at $1.73. Our potential downside is 50%. Or $1.73. So our potential upside, and I'm going to use this number right here, and this is actually conservative because if this was to go back to where it was 3 months ago, this option will actually even be higher than that. Because this represents, if we look at the chart on December 3rd, where were we? So we were at about $99, and we're looking for it to get back to about $95. So there should be even a little more upside, although the time premium eats that away, so it's probably a wash. So that's probably a really fair assessment. So if I go $9.80, minus $3.45, which is trading at right now. So now my upside on this option is if this stock does what I think it's going to do, I'm going to make $6.35 on this option. So if I divide that by $3.45, I have 184% upside on this option, and I have a 50% downside. So again, assuming over time, even if you only get 50% of your trades right, if you can get yourself into a situation where your downside's 50% and your upside is 180%, then going 50-50 means you're going to make a lot of money over time. That you're going to be way ahead. You know, if your downside's 50% and your upside's 50% and you go 50-50, you'll be lucky to break even. So this is the kind of ratio I like to look for. So I'm just going to find one more real quick because we talked about going a little bit lower than that. So let me see.
By the way, this is not financial advice.
Yeah, this is not financial advice. This is my thought process on how I look at trading options. I look at whether it's a stock or an option, I always do a risk-reward analysis. And there's, for me at least, there has to be the chance to make more money than the amount of money that I think I can lose on that stock. So if I go out to April, there is no May or June. So if I go out to April, another month, and we go to that $95 price point, let's see if that works. Very low volume on that, but again, you know, there's 226 right here, so there is some activity, and this is months away. But we'll just do the calculation and see. You know, sometimes you're going to look at this chart and you're going to pick prices, and then you're going to go look at the options and go, you know what, the risk reward is no good for these. So I can't buy an option for this because, you know, the best I'm able to find is a downside of 50% and an upside of 100%, or a downside of 50% and an upside of 80%. Well, then, you know, I'm not willing to take that risk. You may be willing to take that risk if you think you can do a lot better than 50-50 on these.
That's why it's good to, is this why it's good to have friends that have insider information?
Well, yeah, and that's why when you see, like, I don't see anything wacky, but, you know, there's some puts. So this is just 4 months out, and if you look at all the puts, the big activity is at $87.65. Wow.
Oh, really?
Oh, sorry, and $55. This is open interest.
So they know it's coming?
Well, I think there's a lot more people that believe this has the potential to crash than, you know, but you're not seeing a lot. Well, here you go. You got right around the money. You've also got a lot of open options. So, but just looking at this chart, I mean, there's almost nothing above that. And, you know, and there's not much in the neighborhood. It's down, you know, down at these few spots where they spike. And maybe somebody's just hoping for a home run. So they go, you know what? At some point, this stock's going to break. I'll take a shot and pick April and go down to $55. It's only going to cost me 40 cents. If 40 cents turns into, you know, if this stock crashes, 40 cents could turn into $5. That's, you know, over a 10x. Or 10. Then that's you know, over a 20x. So they may be, you know, it's everybody's risk tolerance. For people who have a higher risk tolerance and they want the potential for that gigantic reward, they may buy some of these. I think the odds of this stock being at $55 or $65 are pretty slim by, you know, the mid to late April. And I'm somebody who thinks this stock, you never know, it could happen, but I'm somebody who thinks this stock is severely overvalued, and I'm not even willing to pick that. But I am more conservative of an investor than most. So we said $95. So we're going to pull that up and take a look. So this has been trading for a little while longer. This has been trading since September. So right now, this option is at $5. In September, which is the time frame that we were looking at, I think it was actually late August where it got down. No, the $95 was just 3 months ago. So, wow. This leaves you. Now you're looking at a $5 stock or option that has been as high as $16.40. So, but that was, well, that was about a similar time frame, a little bit longer, but this is a pretty fair assessment. So let's discount it a little bit to $15. So that's a 3x. So at $15, you will have made, the math is easy on this one because it's trading at exactly $5. At $15, you will have made $10 on your $5 investment. So obviously that's
or lose.
Or the downside on this one is we're going to in my strategy, I always give myself a 50% downside. So I would do a stop loss at $2.50. So the risk reward on this one for me would be I'm willing to lose $2.50 on this with the chance that I could make $10 on this.
Hey, so hang on a second. If anybody has any question, ask them now so we don't get too far into it because I know it's confusing.
It is confusing, and we just went through a lot of steps, and this is actually one of the simpler things you can do in the world of options. But once you get through the learning curve, this and probably a lot of you are already through that, this starts to make sense. It takes practice. If you're not doing this, you almost got to learn it over if you go a month without doing this, you got to learn it all over again if you're not really familiar with this. But that's one of the reasons I wanted to make this live stream is so that this is going to sit on my channel now forever. So anybody at some point that wants to jump in and do a put option, they can come back and just revisit this rather than me have to talk about it another 100 times or...
You need to explain, though, there's one more thing you got to explain with these puts.
Okay.
And that is buy to open, sell to close, and there's like 4 different options, and they always confuse me. That's why
you just got them right. So
okay.
We are...
Yeah, I got lucky.
What we are doing, so when you buy this option, you're going to buy to open. We're buying the option. So we're opening a position. When we go to sell this, whether it's at our stop loss because we lost 50% or, we reached our goal and this thing got to $15 and we made $10, either way, when we go to sell this, we're going to sell to close. So you're closing out your position. So at the beginning, you're opening up your position, and at the end, you're closing out your position when you're buying. So we're going to buy to open and sell to close. So yes, that is a very important little reminder that you can come back to this video and just watch for 30 seconds. And I will put in I'll put chapters in here for this kind of information so that, you don't have to sit here and watch a half-hour live stream to figure that out.
There's one more thing when you're doing options that people seem to forget. If you guys are investors, you know what you want to make on your money. You know where your people are like, I'm going to let it ride. I'm going to let it ride with no reason at all. They just say, I'm going to let it ride. You should know as soon as you make that investment, as soon as you risk, let's just say you're $1,500. As soon as you risk that, you should know, okay, I'm getting out when it's at, you bought it at $5. I'm getting out when it's $7.50. Because I can tell you that most of the time when I lose money is when I get greedy.
That's a very good point. If for me, I just picked $15, but you may want to pick $10 and say, you know what, I'll take that. That's still a good deal. You've got at $10, you've made $5. At $2.50, you've lost $2.50. So your upside's double your downside. So what George is saying is, you know, it's always that moment of FOMO, because that means that the stock's doing exactly what you wanted it to do. And when it starts to do that, it seems like it's going to do it forever. And you go, you know what? I'm just going to keep going. It's going to hit 15. It's going to hit 20. It's going to hit 30. Well, at least take some profits out. Get your principal back out. And let if you want to take risk, take your principal out when you've reached your goal. And then, leave your profits in if you want to risk your profits. At least that way you've gotten your money back. I try to just get out. I have an exit point, and I try to get out, and I don't ever lament. If I've doubled or tripled on an option, I don't look back and go, oh, you know what? I could have 5x'd that one. Because, again, if you're doing this 100 or 200 times a year, you've got to take that average over time. So, that's a big win. A double or a triple is a big win. It takes a long time if you're trading the stock, it can take years to double or triple. Although in this market, some of these small cap things are moving very fast.
And the other thing I was going to tell you, it's okay if you don't time the top, because I'm going to tell you, there's a lot that people don't realize how much money goes into researching options and understanding what they need to sell for and what they need to charge and how much money they need to make. They're spending, someone's full-time job is to look at just just Bitfarms options and know when you should sell and when you should buy.
I always assume as a retail investor, I don't know when the bottom is, and I don't know when the top is. I hope that I at least know when we're trending towards a bottom or trending towards a top. But if you're out there and you've got a specific exact number in mind or date in mind, you're probably taking on more risk than you should be.
Yeah, I just wanted to say that because, I always screw up that.
And that hurts. That hurts more than anything. When you got to your goal, you didn't stick to your plan, you didn't sell, and then you end up losing money instead of making money. That I would be much more mad at myself about than, oh, you know what? I only tripled my money. I didn't 5x it. If my plan was to triple it and I tripled it, then I win. If there was more than that, fine. Great.
And then the other thing that people don't understand is that, like, for an example, Bitfarms, I know somebody wrote in there about price target for Bitfarm in March. And what is interesting is how much Bitfarm has gone up and down. Did you think you'd ever see it below $5 again? I didn't.
I'm gonna go to Bitfarm. So I think we're done with that's an option. So we just talked about buying a put option. I just took you through my whole thought process. Again, not financial advice. This is my thought process. Hopefully this helps you guys understand this a little better. So let's switch gears and we'll talk about Bitfarms for a minute.
There was 2 questions. Hope we see gradual upside in Doge. And Tom can explain to you his thought process on Doge, which I'm with you guys, but you can hear what Tom has to say.
And again, this is an absolute matter of personal opinion. I'm a value trader. So I'm looking for things where I feel the valuation is low versus, just running the numbers and seeing what the valuation should be under normal market circumstances. So when I look at Dogecoin and I look at Shiba Inu, I know there's a lot of people that have all these theories, but for me, I don't know how to say those things are, from a technical standpoint, those things from a fundamentals standpoint. Like, okay, Dogecoin is at what right now?
I don't know, 20?
You would think I would have that on here somewhere. Yeah, it's somewhere around, I can look on my app, it's somewhere around 20 cents the last time I looked. But hold on, let's take a look. One moment.
Doge.
Come on now.
Doge.
Dogecoin. I'm almost there. It's being a little slow. Okay. So, Dogecoin is at, I'm going to call it 19 cents. It's at 18.96 cents. So, around 19 cents. Actually, so here's your Doge chart. So, this got up to 70, almost 75 cents. Let's see. It actually got up to a high of 74.14 back on May 8th. And for me, when I looked at that, I think that was the day before or the day that Elon Musk went on to Saturday Night Live. And we knew he was going to pump Dogecoin. So that is not trading on a technical, that is not trading on a fundamental, that is just trading on momentum that you think is going to occur that has no relationship to the value of what Doge is worth. So some of you may know a lot more about Doge than me and feel like there's a strong case that this has use and that it's going to become more valuable over time. I don't see that case. I don't see what the purpose of this is given all the other coins that already exist. I don't know what Doge in specific brings to the table other than, it is holding some value and may always hold some value because it is so highly talked about, so highly traded that, it could fluctuate for years. I mean, here just back at the end of October, this was at 34 cents. So from 19 cents, that is a monumental upside. So if you're a person who just believes, look, this thing's going to go up and down because that's what it does, then that's a line of reasoning to trade it. But for me, I don't, that's not how I make any of my trades. So for me, I can't invest in something like Doge or, Shiba Inu.
Yeah, and we're not saying that they're not going to burn some of their coins because they're going to have to in order to get a valuation of anything.
Right, that's a great point. They can burn coins. There's all types of things. Look at what Ethereum just did. They made some fundamental changes, and their value went up dramatically.
Right, and we're not saying that. We're just saying currently it doesn't. And Tom is more of a principle-based, investor. Now, listen, me, I bought it.
Well, look, there's money to be made. This thing went from 18 cents to 74 cents in a couple of weeks. So
yeah, and I mean, I had a blast.
Up, down, maybe the next one's up. That's been the pattern. So if you believe this and you can, the key is you got to have the stomach for this because where's the bottom? It looks like this does. Looking from a chart aspect, this looks like it's bottomed out. So maybe the next move's up. But you've got to have conviction in that, and that's part of my problem. I just can't get strong conviction in that, and if I don't believe it, I'm going to have a hard time holding the trade. So let's look at Bitfarms because we had some questions about Bitfarms.
Bitfarm, we got a question on Bitfarm. Hey, Corey. And
Corey, hello.
Cypress, June 17 calls, and whatever. Is it THETA? Zeta? I don't know how you say that.
Let's see. What are you guys' thoughts about Cypher? I'm just taking 1 second. I haven't really read through So, hello, everybody. Welcome.
What's that?
Rickshaw Man, just a quick answer to that is, and I have not studied this in the last 45 days. Thank you very much, Corey. I appreciate it. Thanks a lot.
Oh, #1 fan. Thanks, Corey.
All right. I haven't really done a deep dive on Currency Works in at least a month and a half or more. I studied that very closely in like February, March, April, May, and
What did they do?
Currency Works, George, is actually the company that you and I were trying to get a hold of to make our coin.
Oh, okay.
So I will tell you, one of my fundamental problems was we were sitting here, a ready and willing customer. I literally could not get a hold of them. So that was deeply concerning to me.
Isn't that crazy? I mean, we had we made it. We made a coin.
We did it a different way.
Yeah.
Because they didn't answer our call. And it's not like I called once and they didn't call back. Like, I tried to get a hold of them, with pretty consistently, and it just didn't happen. And, they had a couple of really high-profile things. They did something with Kodak and a few other things. So they did a high-profile thing. But the more George and I looked into this process, we were finding so many other people that seem to be able to do the same thing that they do for a tenth of the price. So,
and it's really not that hard, guys, to make a token. I mean, I had no idea how easy it is. I mean, you got to have somewhat of a computer knowledge, but it's really not hard. If anybody, let's put it this way, if anybody wants any help, let me know. I mean, it's really easy. I actually set up. You can go to it. It's poopcrypto.com. Poop Crypto. And I haven't released it yet because we're going to do another coin and we wanted to wait. I'm doing a Kudab coin.
So Corey's asking, so yeah, I'm glad to be back too. Believe me, that was not fun being out. And he's asking, did you lose? Everything kind of went down 50%. Did you lose 50%? So I did. I'm way off of my highs. I was able to do better than that because I did, through the use of short-term options, I did make some moves along the way, but I did not sell even one share of any of my stock. The only moves I made were through options in that whole down cycle. So, and that helped mitigate some of my losses, but I'm holding the stocks, but I don't consider those, I'm down, but I don't consider that a loss because I actually added shares of everything. So, yes, I am down way off of my highs, but I have a high level of conviction that we're going way up from here. So, I feel like
now me, I sold everything. I have
that's
a conviction.
A true story.
I have a conviction right now in the Bitcoin world is the exact opposite of Tom's, and that is that they're going to screw with us before it gets better. And I hate losing money. And with this run, we just had a massive run. And this has happened to me 3 times before where it ran way up and then bam, it just dropped. And so I just said, nope, I ain't doing that again. Now, I did keep my $5 Bitfarm calls.
I was going the other way, Corey, so, I'm sorry to interrupt you, George. He's saying my options got killed, his longs. So I was going the other way. I was selling them instead of buying them.
Yeah.
Because it just, that was such a brutal market. I felt much more comfortable selling them. So, I was getting paid back a little bit on that. I did buy a few puts. And I did buy a bunch of short-term calls almost right at the bottom. So some of these have had nice, here we are on Bitfarms. We're up over 30% in, in 1 week. So I killed it on. I bought a boatload of options on the Friday. This was, I think, Friday. So this is where I had I loaded the boat here. And you guys probably, most of you that watch know, Bitfarms is my biggest position. So even loading the boat on those short-term options didn't change my world a lot.
What'd you buy them at, Corey? I guess it really, depends. Or if I mean, if you're doing it for tax reasons, we were talking about it before earlier. That sometimes it makes sense to do what, Tom? I don't know. What it would be calls or
Well, on this one, it depends what your strategy is. If you on your shares, so you've got a healthy position in Bitfarms. For me, I have a very high conviction that Bitfarms price is the first thing it's going to do is double. So I'm not selling. I will not sell a share until $10. But that's not. So you're in pretty good. 653 is not bad. I mean, we're at 580 right now. So maybe you were up a little, a lot, and now you're down a little, but you're still in really good shape. So the thing that I always try to make sure to avoid is, and this is why the big players in the market do this to us. They punish things beyond reason so that they get to a point that's low enough that a lot of traders, once they get back to break even, they're so relieved just to get the money back that they put in that they sell, and they made nothing. When really, all of this action, in my opinion, really all of this action was just Bitcoin and Bitfarms being oversold. And more specifically, Bitfarms being oversold. Because the fact is, at $40,000 or $45,000 of Bitcoin, Bitfarms is going to make a lot of money. So obviously, if it goes up to 60, 70, 80, 100, they're going to make even more. But their business model works great at Bitcoin 40,000. So there was no reason for this stock to crash. It was already trading at a very low value to begin with. So for those who are asking, those are my thoughts on Bitfarm. My my 90-day price target for them is $10. So again, I don't have a crystal ball. I don't know that that's going to happen, but I feel pretty strongly that that's what I'm looking for. And I'll probably use options to take some profits along the way and hold my stock all the way to that point and beyond, depending on what's happening with Bitcoin. Obviously, you've got to be flexible and adjust your plans to what's happening in reality. If there's been some major shift in either Bitfarms or Bitcoin, then you've got to continuously reassess. So Corey, so it sounds like you're feeling that same way, and I can tell you, just because I've been doing this so long, I did that for the first 5 years I traded. I would get back to where I was, and I was like, thank goodness I got my money back and I'm out, only to watch those. I'll tell you an example of that, and this goes way back. I bought McDonald's, I think. I bought McDonald's at $24. I bought Microsoft at like $27. They went down. I got back to those price points and I sold them. So, just to put it in perspective, McDonald's is at $265. I sold it at $24 so I could get my money back. So it's doing that 100 times, you feel differently. You don't feel good anymore just getting your money back, because that has 10x'd. And that's a blue chip type of a stock. And Microsoft did the same thing. They're at $334. I sold them $300 ago because I got my money back and I felt good. I felt great when I made those trades. I feel horrible about them now, but 10 years, more than 10 years too late. That was probably 12 years ago, I think. Jamie, is it? Long term, I am bullish on Mara. I do have some 30 to 60 day concerns with them. And you're welcome, Corey. I hope it helps. Yeah, see? So there's an example. Thank you very much, Corey. That's very generous. I appreciate it. That's an exact example. So that he's giving an example of the same type of. But you know what? At least you bought it. You bought it for. It sounds like. Okay, you bought it 558 and you sold it 6, so you kind of got out, and then the run up happened. So yeah, you kick yourself when that happens because that was probably your thought going in is that it was going to go to $8. So you never know, and you just the best thing you can do is learn in those times, and it a lot of times it takes a lot more than one time to make the same. I have made the same mistake a lot more than one time in a row. So, it takes a while. It takes a while to learn and get. And that's why right now I'm able to have such strong conviction in things because I feel like I've made just about every mistake you can make. So, and I don't know a trader that hasn't. And if they tell you they haven't, I wouldn't believe them because this is how it works. There's literally trillions of dollars at stake, and there are people with so much money that are moving the market in an effort to take retail investors' money away because it's the low-hanging fruit. It's the easiest money that they can take because the rest of these people are professionals. And, so a lot of money goes from retail investors to hedge funds and other, big money organizations. I have an Apple story also. I bought and sold it in the same day. I bought it at $96. I bet this was 2006 or 2007. I bought it at $96 on earnings day. They reported earnings at 4 o'clock. I sold it for like $146 at the open the next morning. So at that time, I was like, wow, I just made the greatest trade that's ever been made. And, the stock has 10x'd since then. So that really actually was probably one of the worst trades I ever made.
Yeah, but you don't know. No one knows. You just don't know.
No, it's easy to sit back and look and reflect and go, oh, that ended up going, then they say go to the moon. Apple went to the moon. And so did Microsoft and so did McDonald's. I mean, and these are big. McDonald's, they've been around forever. That's not a company that should 10x from where it was, but it did. Same thing with Microsoft. Microsoft was one of the biggest companies in the world when I was trading it in the 20s and 30s. So, and now it's in the 300s. Oh, see, there you go. That's you can make a lot of wrong calls when you get one right and you make 2,000%. That's the beauty of options. So that's why I look at that risk-reward situation and try and make sure my upside is way more than my downside. Because over time, you will stand a very good chance of making money on options if you're dedicated to sticking to your plan. So I don't know if you want to just look at Bitfarms before we wrap up. And I guess we talked about that. My 90-day price target for this is $10. I honestly think it's going to get there a lot faster than that, but I'm going to give it 90 days. We were just at $9.36 on November 10th. So we were right there. If Bitcoin gets healthy and approaches its all-time high again, I don't see any reason why Bitfarm actually, based on their performance, should run up even more than that. So I think I believe that's a very realistic goal. Also, that's a long-term investment for me. Yeah, I mean, I think on Bitfarms, if you're asking $10 calls, I think that, I wouldn't do January $10 calls, but I might do February or March $10 calls. Actually, I am doing March. No, I actually have I have a bunch of February calls. I'm loaded up on Bitfarm's February calls. But I'm at a little lower strike point than that. I think I'm at 750. Argo blockchain is something I've never done a video on Argo blockchain, and I think I'm going to, because the way they've been priced lately, they're just as oversold as everybody else. And their operations seem to be going well. Their information that they're giving their investors has radically improved in the last 75 days. And that's been my biggest problem with Argo blockchain. I don't like these companies that just go dark. And you got to wonder, because with Bitcoin, they've got a very quantifiable thing that they can report to us once a month. How many Bitcoin did you mine? So when they don't report that, it concerns me.
That's the only thing they got to report.
Right,
and you
exactly.
got your own pool. Sad.
Right. So when somebody's in the dark, I would rather stay away from them. If they're not going to provide the information, I'll go with the companies that are letting me know every month how they do. So I know exactly where my investment's at. But Argo has made their information has improved dramatically, and their stock, in my opinion, on my chart, on my sheet, they're undervalued. I have not bought any of them yet, but I am feeling much better about them. They have started to report, so they weren't reporting. They have started to report, and I think it looks to me like they are going to now monthly report the amount of Bitcoin that they mined. But I'll tell you, it's the weirdest thing, Argo. But
Marathon?
Yeah. Well, they can't hide. They got their own pool, so
yeah,
they can run, but they can't hide. What really surprised me was Hut did not report, and if you did the math, they gave you enough information over a 3-month period to figure it out, but they did not report their their October Bitcoin mined. So they did several months in a row, and then they did not do an operations update in October. And then they did one in November, and I was very satisfied with it, but it scared me a little bit that they went dark.
Well, they were probably just they thought about it and it wouldn't help them any, so they were like, why do it?
It's possible. Maybe they had an off month and rather than explain the 10 different reasons why this was an anomaly, they just didn't report it.
That's actually a great idea to say for the investor relations. That we're gonna give you monthly information, instead of quarterly. We're gonna tell you exactly what and how many we've mined. You know what I mean? Because that's really important, because that's their value.
And it's the easiest sector in the world to report on a monthly basis. I don't need to see their financial statements. You see that quarterly and you understand what their gross profit margins are and all that. So like George said, they got one thing. They mine Bitcoin. How many did you mine? And if you don't know that number, then I'm even more worried. If the company doesn't know that, and obviously they do know that number. So they're just making a decision not to tell the public what that number is.
You got anything else?
No, overall, let's just take a peek. We're at 50,764, so that's right within the range on Bitcoin where we've been over the whole 3-day weekend. So I guess we'll have to wait and see. I'm still seeing everything, and for me, and George and I differ on this, I'm still bullish. I think we're still headed up. I would like to take this 52,000 line out. So I'm hoping that happens sometime in the next 48 hours, but only time will tell.
Yeah, and here's the thing. I mean, Tom has more of the metrics, I have more of a gut feeling. So does that make sense? I hope that makes sense.
That's right. We trade different ways. George goes on his gut, and there have been several times where, he picked this 48,000 crash weeks before it happened. He just kept he'd just randomly say, throughout the day, 48,000, it's coming.
It's coming.
And that was, you started that more than 2 weeks before that happened, and sure enough.
Now listen, long term, I think these are great plays. I just know that they're going to screw with us because they can. I mean, you got to. I mean, it's crazy to think that somebody would be that vindictive, but I'm going to be honest with you, they are.
That's how it works.
This is a game, and that's all it is to them. It's my life, it's your life, but to them, they're just screwing around. Because what if they lose $100,000? What do they care?
Oh, they deal in numbers that are so far beyond what.
Just remember, what does the average hedge fund manager make?
Oh, it's astronomical. There's always a list of 10, not always, but on the average, there's at least 10 hedge fund managers that personally, not their fund, themselves, they make over $1 billion a year. So that's the kind of money they're dealing in. It's staggering.
I know. Can you imagine that? I mean, as a salary? Each year. Not like 1 year.
So
each year.
Yeah, that's right. There are people who have made $1 to $2 to $3 billion a year every year for the last 10 years. I mean, and they're never going to be on anybody's list of the richest people because they don't have to tell anybody, and they're not on anybody's radar. So,
and that's the best way to be.
That's right. Not every hedge fund manager is making $1 billion, but there's usually about 10 of them that do that, which is absolutely staggering. So,
yeah, I know.
And there's also a few that jump out of the window at the end of the year. So I guess it's some good years, some bad years.
That's really funny. All right, thanks for watching, everybody. What's the week looking like? Have you figured out what you're going with next?
For videos?
Yeah. You got any ideas yet?
Well, yes, I do. I have several videos planned. I've had a bunch of requests for a marathon video because they had some monster news at the end of the week last week, and they've had a bunch of things happen. So I will definitely be doing a marathon video shortly inside of the Bitcoin sector. So I'm going to get a few Bitcoin. I don't know if anybody watched. I did a video on either Christmas Eve or Christmas, and I talked about I'm going to be trying to add to. I'm not going to leave the miners. That's a main thing that we do, and it's where I spend a lot of my time. But I have a lot of other stocks that I trade that I just have never talked about on the channel, and I'm going to start talking about those a lot more in 2022. So I'm hoping to bring some new information to the channel, and we're going to start this week because this is the final week of 2021, and I want to start to let people know what my 2022 thoughts are. So that's what you guys can expect. That's what's coming.
All right, well, it was good talking to everybody.
Yeah, thanks a lot, everybody. And we'll
hang on, answer the last question. You see it?
That's other than, the anomaly was that at one point Marathon ran up to 80, and then that was more at Bitcoin like 59,000, but I don't know what happened. Somebody drove that thing up to the moon just so they could cut the legs out from underneath it. But you're right, 45's a... Thank you. I appreciate that. George and I both appreciate that, I'm sure.
Well, the whole reason we started this was to help people make money. Bottom line.
That's right. And George and I have done a lot of planning over the last couple of weeks, and we really want to try to actually take the channel up a notch. And hopefully that's going to help everybody.
All right. Well, good talking to everybody. Have a great evening.
Thanks a lot. We'll see you in the next video.
Bye, guys.